What's going on, my friends? So if you're looking for the best crypto live trading strategy for 2025, you landed on the right video. What I'm going to share with you over the next few minutes is exactly what I did over the past 7 days to not only make over $100,000 trading crypto, leveraging a simple 5-step strategy, but I'm also going to share with you how to buy the bottom virtually every single time to become a sniper with your entry points. You see, a lot of people get into the crypto market, myself included, back in 2016, 2017 for their first time, and they just buy a project simply because an influencer online talks about it. And this usually leads them to round tripping their bags to the bottom, getting dumped on, used as exit liquidity, and then having to sell the bottom, getting liquidated, pretty much forced to pay their rent, their bills, or just simply because they can't take it anymore and they have to get out of the market. So if that's you, then I want you to pay very close attention to this video. And if that's not you and you're just looking to refine your trading skills and be able to better spot the right entry points for potential buys and longs, then you're going to absolutely love this video. If you didn't watch my previous video in this crypto trading series, teaching you the top strategies that I've been leveraging for almost 10 years of trading the crypto market, then I'll leave a link for that in the description below this video. And I encourage you to like this video, subscribe to the channel to stay tuned for the upcoming videos in this series, teaching you these live crypto trading strategies in real time. So we're going to dive on the computer. I'm going to give you real life examples, show you some of the trades that I've taken recently. That way you have proof that this works. And by the end of this video, you're going to walk away with a proven strategy that you can be able to apply today. So with that being said, let's run it. All right, bull runners, welcome back to the channel. So let's dive right in and talk about the best crypto live trading strategy for 2025 to be able to buy the bottom virtually every single time. And I'll show you proof in a little bit and give you real life examples. Even if you don't have any prior trading experience, without watching charts 24/7, you don't need a lot of capital. You can start with as little as $100 today. And we're not going to do any guesswork. We're not going to rely on hype. And this strategy works 24/7, 7 days a week. So this isn't the type of strategy where you have to do it at 9:30 in the morning like a lot of Forex traders or day traders or swing traders will tell you. I've been applying this strategy anytime that I want of the day. So this works based on your schedule, which is the best part. So for those of you that are brand new to the channel, a little background about myself. My name is Nick Anderson. I'm the founder of Bull Runners here on YouTube and also Altcoin Pro, which is one of the top crypto education companies in the world. We have one of the largest global newsletters for daily crypto news and updates. And I personally started investing back in the crypto market in 2016, 2017's bull run. And over the years, I've documented my journey. And now we have over 360,000 subscribers on YouTube. And as I said in the previous video, maybe an extra subscriber by the end of this video if you get value from this. So the reason why I bring this up and why you should listen to me is because I made my first million before 30 years old. And I'm continuing to refine my strategies every single day. So I'm going to share those with you as I refine them. But first, it's important you know, I'm not guaranteeing that you're going to make 100 grand in a week. In fact, crypto's very risky. You can lose money in these markets. This video is purely for educational, informational, example purposes only. Past results are not going to guarantee future profits because it takes solid risk management, patience, persistence to make money with crypto, especially in trading. So I don't guarantee any results. And I'm not telling you to buy or sell any cryptocurrencies in this video. And if you click any of the links below, those are our referral links, which help support value-based videos like this. So I appreciate you for supporting the channel. That helps us bring you the best information to be able to produce results. So as always, results aren't typical, so don't be typical. So let's dive right in. This is part 2 in the series. Again, if you guys didn't see part 1, link will be in the description below. But we're going to talk about how to find potential coins to buy, how to do top-down analysis again. That way you can identify potential trade setups to spot confluence and divergences, when to enter and exit long trades, which are buys, whereas the first video we talked about shorts and selling, and also how to set your stop loss take profit to minimize your risk and maximize your reward. And by the end of this video, you're going to be able to access live calls and daily market analysis with crypto pros to refine your strategy. So step number 1, how do you find coins that are on good dip buying opportunities? Well, the first thing that you want to do if you're brand new to crypto, and even if you have been around the crypto market for a while, you can create your trading account using the link in the description below, and you can deposit as little as $100 to get started. The broker that we're using gives a 10% deposit bonus up to 50K. So if you deposit 10K, you get $1,000 to trade with. If you deposit up to 50, you get 5K to trade with, and that should hit your account by the end of the month. And so there are other brokers you can use. There are other crypto exchanges. You could use tons of different ones. The one in the description below is the one that I'm personally using on a day-to-day basis and the one that I'm going to be giving you examples for in this video. So feel free to use whichever broker you want. So what you want to do is open the futures trading dashboard and sort the altcoins by the lowest 24-hour percentage performance or by largest volume. So after you've created your account at the top, just click futures. On the top left-hand side of the screen, you're going to see Bitcoin right here and the price chart. And Right here, you're going to see the order book. On the right-hand side of the screen, you can see where you're going to be placing the orders for the trades for buying long and selling short. And right down below the price chart, you can actually see the trades right here. I'm in a few live trades right now just to give you guys examples. One of them is actually a long on Bitcoin. The entry price for this trade was $103,531. The floating profit and loss is $18,000 in profit. And then I'm in a few other trades as well too. As you guys can see, the majority of them are in profit anywhere from $200, $1,000, $500, $400, $500. And only one of these trades is down $173. Now, if I go to my most recent position history, you guys can see this sell on Bitcoin closed at $28,000 in profit. This one right here for $1,000. This one right here for $1,300. This one right here for $1,000. This one right here for $67,000 on XRP. This one right here for $1,000 and another one for $26,000. And that's all in a matter of 24 hours. If you look right here, since June 10th to June 17th, over the course of 7 days, the total P&L is around $145,000 with 5 winning days, 2 losing days, and 1 break-even day, simply because I didn't trade on that day. So you guys can see right here on the winning days, $23,000 and $23,000. The losing day was $2,000. The winning day was $5,800, lost $7,000. Then a major winning day of $51,000, another major winning day of $50,000. So I've done about $36 million in trading volume and 161 orders closed. So that's basically trades closed in the past week. And of those, 119 of them have won. So that's a 73.91% win rate. So the reason why I show this is because a lot of people are wondering if it makes more sense just to hold Bitcoin. And as you guys can see, with Bitcoin's change being down 3%, down 2%, down 5% over the past week, well, the total P&L on this strategy for me is up 83% in the past week. So I think you can see why this makes sense to pay attention to this video and to apply what I'm about to share with you over the next few minutes. Now, it's not guarantees because my results are obviously going to be different than yours, depending on your bankroll. If you're starting with as little as $100, you're not going to make $100,000 or $145,000 in a week, but you can build up your bankroll over time and eventually get to the point where you're placing bigger trades. Don't compare yourself to where I'm starting from if you're starting with less money than me. Remember, I started at zero. I was actually 15 grand in debt, and any money that I made from my business, I put into the crypto market over the past 9 years. And a lot of that I've lost due to scams, rug pulls, projects that have dropped. So I've made all these mistakes that you're probably going through right now. So I speak from experience here when I talk about that type of stuff. And I know it's frustrating and it's heartbreaking when you lose money, if not all of your income. That's why I spent so much time refining my skills to be able to learn how to trade the market so I can basically print money on demand no matter market conditions, whether markets are going up, sideways, down, you name it. And I'm going to teach you that today. So you're going to sort in the upper left-hand corner based on the top volume projects. All you would do is just click volume until you see the largest at the top, or based on 24-hour percentage. So if you just click it, it's going to sort based on the highest 24-hour growers or the lowest 24-hour sellers or droppers or whatever you would call these. So these are the ones that are down the most. So when you click projects that are down the most, you're going to find a lot of low cap projects because these fluctuate a lot. Usually I like to trade the large cap projects like XRP, Bitcoin, Ethereum, Solana, Dogecoin, Pepe. And if we watch Bitcoin, this will give us an understanding of what's going to happen with the rest of the market, because if Bitcoin is in downtrend, then altcoins are going to be bleeding out even more. So I always start my day out. When I wake up, whether I wake up at 6 in the morning or noon, I start my day out looking at Bitcoin, because this gives me a pulse on the entire market and what's happening. Because as you guys can see, Bitcoin's been selling off since late last night at the time of making this video on the 16th. And you guys can see here with these red arrows right here, these were actually some sell orders. And you can see I pretty much sold the top of Bitcoin right here. And I also sold this retracement bounce right here. And right now, this trade that I'm in for Bitcoin, I entered in right here at the virtual bottom, and now we're bouncing to the upside. So I want to show you how I spotted this trade, exactly what I look for, and how to become a sniper so you can get as close to the bottom as possible. Now, you're not going to buy the exact bottom. That's why I say virtually the bottom, because if I just zoom in here, you can see I'm virtually at the bottom on this entry point, other than this wick a little bit below my entry, but it was bought up relatively quick and we reversed back to the upside, giving me a few options here. I can let the trade play out, or I can move my stop loss if I want to about $104,000 if I want this trade to at least close out in profit and have risk of losing no money. So after you found the crypto that you want to trade, for example, I'm going to use Bitcoin in this video, and then you guys can do this with any project that you want because these rules are universal. The next thing that we do in step 2 is top-down analysis. So we want to start with the weekly, then work our way down to the daily, 4-hour, 1-hour, 30-minute, 15-minute, 5-minute timeframes to identify the trend of the market. And if the majority of the higher and lower timeframes are bullish, then we look for areas of interest to long, which is buy during an uptrend on these pullbacks. And if the majority of the higher and the lower timeframes are bearish, then we're going to look for areas of interest to short, which is sell during a downtrend. So this allows you to be able to make money during a bull market and in a bear market as well too. And the reason why this works is because when you do top-down analysis, you can understand a market's direction from a big picture and also the micro picture as well too, zooming in, helping you avoid buying the tops and being used as exit liquidity during strong uptrends or selling the bottoms during strong downtrends based on emotion. You can use logic, you can use data to accurately make the right decisions here. And this will help you confirm when a fast rising coin is likely to reverse based on key levels on all time frames, increasing your odds of a successful short when overbought conditions hit areas of interest, and vice versa for a long when a project bottoms out. All right, so the first thing we're going to do is top-down analysis. So we always start with the weekly chart. Now, on the upper left-hand side of the screen, you guys can use the broker below, or you can use TradingView to be able to use their chart. You just click this icon right here, and you select the 1 week. And then we're going to work our way down to the daily after that. So what we want to see is the market trending up or is it trending down? Now, an uptrend is just a series of higher lows and also higher highs. So as you guys can see, Bitcoin has been making higher highs ever since the 10th of April of 2023, leading to 2024. This was a higher high. To the recent high of the 16th of December, a higher high. And now we're putting in an equal high, but until we break below the low of April of 2025, we are going to be in an uptrend on the weekly. So that is a bullish trend. Now we work our way down to the daily. And if we're looking all the way back to the bear market bottom, well, we would be in an uptrend. But what I want to look back to is the 9th of April and see if we're still in an uptrend from that time. Because if we're not, then that could give us some insight to whether Bitcoin could start going down further, closer to $100,000 or potentially even lower. Because as you guys can see right here with this candle body close on the 6th of June, we actually put in a lower low than this low right here. We even closed a lower low than these candle body closes all the way back here. And we also put in a lower high than the high from the 22nd of May. So in my opinion, it looks like we are in a downtrend right now on the daily until we clear the high of the 9th of June and hold it as support to put in a higher high and inevitably a higher low. So the daily is actually in a downtrend right now. So now we want to zoom into the 4-hour chart. And similar to the daily, we can connect the highs back to the 22nd of May. We're forming lower highs, and we're attempting to hold support right here for Bitcoin with these long candle wicks down to about $102,700 to about $103,400. So all that we've done right here is just put in a lower high from the 16th of June. The 4 hours in a downtrend as well. And if you look right here from the 13th of June, we can see the lowest low, we see a higher low, a little bit higher of a low, another higher low, and then we see a wick below that low. Now we see a lower low than these two lows and these two lows, but we're still above this low right here. And so I would consider this a downtrend since we broke below these lows right here on the 17th of June. And now what I would look for is Bitcoin to bounce to form a lower high in this downtrend on the hourly. So now we zoom into the 30-minute chart. So the 30-minute chart is very similar to the hour chart. We see these lows right here. We broke below the low right here. We put in a lower high than the previous high right here. And also we're well below this high right here. So we're in a downtrend on the 30-minute. Now on the 15-minute chart, we can see the same thing. We just see these lower highs right here. And we see lower lows. We saw an attempted breakout right here. And now Bitcoin is pulling back and consolidating on top of this descending resistance right here. So until we clear this high right here, which is the most recent high, and put in a higher high and a higher low, we're going to be in a downtrend on the 15-minute. So the 15-minute still in a downtrend. And you can see the 5-minute chart is ranging between resistance right here, support right here, with a high at about $105,300 is another resistance. So I would consider this a downtrend because this is just lower highs. And, technically we did have a lower low right here on the 17th of June on this candle body close. So a downtrend on the 5-minute as well. So after we've checked the 1 hour, the 30-minute, the 15-minute, the 5-minute timeframes to confirm the trend, which is used to enter the trade on these shorter timeframes based on the direction of the higher timeframes as well. So what we want to do is mark the most recent support and resistance on the 1 hour chart. And because we can see 1, 2, 3, 4, 5, 6 showing a downtrend, only the weekly showing an uptrend, we would actually be looking for good opportunities to short the market on these major breakouts for Bitcoin during this downtrend. But we can also find good dip buying opportunities to long Bitcoin based on these key parameters that I'm going to share with you by the end of this video. So we're going to go to the 1 hour chart and we're going to see where the recent support is and where the recent resistance is. So as we can see, there's a support right here where the price bounced off of after this pullback. There's another support down here at this wick. And if we were to zoom out even more, it's pretty much right around here. It wicked a little bit below it. And the most recent resistance is right here at this wick at around $105,000. And the next resistance would be right here at about $106,200, which also acted as support for this wick right here. And also these candle body closes were the resistance for it. So these would be the main levels to watch for areas of interest here for potential trades for Bitcoin. Now we want to confirm the following. Is the relative strength index and the stochastic RSI oversold on the majority of lower time frames, which would be the 1 hour, the 30 minute, the 15 minute, the 5 minute? Remember, the 4 hour, the 1 day, and the weekly are the higher time frames in this example. And then the 1 hour, the 30 minute, the 15 minute, the 5 minute are the lower time frame examples. And the majority would just be 3 out of the 4. So overbought simply means the RSI is above 70 or the stochastic RSI is above 80. If you guys didn't watch part 1 in this series, then go check that out. I explain that in more detail. Whereas oversold is when the RSI is below 30 or the stochastic RSI is below 20. And I'll give you tons of examples in this video so you understand it. So what we want to do here is at the top of the screen where it says indicators, this little symbol, we click it and we type in RSI for relative strength index. And then we type in stochastic RSI to bring up this indicator as well too. And we're just simply going to check if we're oversold on both of these indicators on every single one of these lower time frames and just put a yes or a no based on wherever the current price is at the time that you're analyzing this video. So I want to give an example though of this most recent low, which is where I entered into this long for Bitcoin at the virtual bottom. And now I'm up nearly $22,000, almost $23,000 in profit. So I want to use that as an example to show you why I took this long trade when we are in a downtrend on the majority of the lower time frames, showing the 1 hour showing downtrend, 30 minute, 15 minute, 5 minute, and even the daily shows downtrend, the 4 hour shows downtrend. The only one that shows uptrend is the weekly. Why would I take a long trade in a downtrend when I should be looking for opportunities to short? Well, that's a great question. So I'm going to explain why right now. Because you can make money during a downtrend, longing and shorting, which is a little bit more advanced, but I know you guys want to become a pro with trading, so I'm going to give you this information for free in this video. So what we're going to do on the hourly chart is mark this low, and we're going to see, are we oversold on the relative strength index? Now, oversold would be anything below 30. So as you can see, we are right here at 23, and we are right all the way down here at almost 0 on the stochastic RSI. So that would be a yes for both on the hour. And on the 30-minute chart, we can see it's a yes as well too. Now, if we go to the 15-minute chart, we can see it's a yes for the RSI. We're all the way down here below 20, but it's actually a no for the stochastic RSI because we're right here at about like 22. So we're close, but it's still a no. And now we go to the 5-minute chart. We're all the way at 9 for both the K line and the D line on the stochastic, and the relative strength index is at 27. So that's a yes for both on the 5-minute chart. Now, here's a very important point. If you see that the majority are saying yes to being oversold on the relative strength index and the stochastic for the 1 hour, the 30 minute, the 15, and the 5, this is an amazing entry point for a spot position. Now, when I get into leverage trading by the end of this video and how to actually place trades, there is a level of risk here because the price could bounce for a little bit. These indicators can reset and rally up and we can continue higher for a lower low, which is why I talk about divergences to actually have a safer entry point. But if you're buying spot, you can't go wrong if all of these say yes. And as you can see, we only have one saying no, and that's the stochastic on the 15-minute chart. So once I saw this, I literally just entered into the trade right away, and I set my stop loss a few percentage points, like 1 to 2 below this low right here, in case the price continued to the downside. And even if I got stopped out all the way down here, well, guess what that means? That's another great entry point for a long, because then that is the most likely scenario where the price bottoms out before we see a bounce. So now that we've confirmed the majority say, yes, we are oversold for the RSI and the stochastic, the next thing we want to confirm is if there's confluence for them being oversold, which means they're both saying the same thing. So you can just simply look at this right here, and if it says a yes on the 1 hour on the RSI and a yes on the stochastic on the 1 hour, then that's a yes for oversold confluence. If one says a yes and one says a no, then that's a no, because they both need to say the same thing. So the only one that would be a no in this scenario is the 15-minute, because you can see that the RSI says yes, being oversold on the 15-minute, but the stochastic says no, it's not oversold in the 15-minute. So that gets a no for confluence. Now, the third thing that we want to confirm and look for is bullish divergences on the majority of the lower time frames. And what a bullish divergence is the opposite of a bearish divergence that I covered in part 1 when you watch that video. But it's when the price makes a lower or an equal low, which could be a double bottom, but the RSI and the stochastic makes a higher low or an equal low. It's a sign that downwards momentum is weakening, and it's perfect for potential long opportunities. So what we want to aim for is 3 out of 4. But it's not a deal breaker if we don't see 3 out of 4. This just strengthens the signal for a better entry point. So we're going to start on the 5-minute chart because we're here right now. And let's zoom in here to this low that's marked right here. And what we want to do is we want to connect this low with the previous low, which would be right here from the 17th of June. And we want to see if the relative strength index and the stochastic RSI are making higher lows. And so if we just pair it up, you guys can see right here, the RSI was at 23, and on the lowest low, the RSI was at 27. So that is a yes on the 5-minute for the relative strength index, and also a yes on the stochastic because we put in a higher low as well too. And that's also confluence. And so the more proficient you guys get at this, the faster you're going to be at this. You don't need to type stuff on the screen. I just mentally remember and I add this all up in my head to be able to take the trade in literally 1 to 2 seconds because I can speed through these time frames and I can just see what I'm looking for. But the reason why I draw this up on the screen for you is because if you're new, you need to see it over and over and over again to have repetition so you fully understand this. So now we go to the 15-minute chart and we can see, yes, there's a bearish divergence on the RSI where the price chart's putting in a lower low, the RSI is putting in a higher low, and there's also bearish divergence on the stochastic. So that's a yes on the 15-minute for all three of these. Because they both say yes, that's also a yes for confluence. So now we go to the 30-minute chart. Now you can see right here the RSI was at 18. It drops down to 14, then it bounces up to 22. So it depends on where you mark the low. If you mark it on this green candle body close or if you mark it on this red candle, I like to wait for a candle body close on the 30-minute or the hour chart. But let's just put no here for the divergence on the RSI because it's not obvious. Now, if we look at the stochastic RSI, it is obvious because the K line, the D line are below where they were at the lowest low. So that would just be a no for confluence because they both don't say yes. Now, if we go to the 1 hour chart, we can see the RSI was at 22 at this low, and then when it made it lower low, it was at 23, so pretty much an equal low, unless you're marking on this red candle, but we're marking on the candle body close, so this could be considered a yes for the relative strength index, and it's also a yes for the stochastic RSI. So right away, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 yeses, and we only have 2 no's. So that's the majority showing yes, this is a great trade. At this point, I would enter the trade. But the reason why we do this is because when you check the relative strength index and the stochastic RSI, if they're oversold on most of the lower time frames, it's going to reveal when a fast rising coin is bottoming, signaling a potential reversal soon. Because if you're not getting the majority of these indicators telling you the same story, then we're not at the bottom. So this is how you become a sniper with your entry points. And the reason why this works for confluence is because when both indicators are agreeing with each other and saying the same thing, it filters out weak signals and it boosts reliability because it's telling the truth. So a strong bullish divergence where price hits a lower low, but downward momentum is weakening, and we're seeing a higher low on the RSI, the stochastic, on most lower time frames, along with price action in an area of interest, which would be support, pinpoints a potential reversal moment. And if you pair this with all of these checks right here, it's going to ensure that you catch oversold bottoms at the right level for profitable longs with minimal risk if you set your stop loss at the right level. So that brings me to step number 4. When do we enter the trade? Well, we've already marked the most recent resistance and support on the hour chart. And we could either enter the trade right now. Again, it's risky because yes, the price could go lower, or to play it safer for a long, we would wait for a retracement after the rally where the price falls back to a 50% or a 61.8% retracement level of the sell-off range of the initial bounce from the low. So here's another example of a trade that I actually closed for $14,000 in profit. You can see I did another $33,000 profit trade that I explained in this video, but this $14,000 trade was a long on Bitcoin. Now you can see I entered this trade at around $103,121 on the 12th of June. And as you can see, that was right here, pretty much at the bottom. And if I zoom out, you guys can see how incredible this strategy is. And I did it again right here at the bottom. I also did it back here at the bottom. So 3 for 3. This strategy is proven, it works, it's predictable. But if you want to play it safe and you don't want to accumulate the bottom and you want to wait for a bounce in price action, then we're going to talk about what we need to look for a retracement in order to get another good entry point. Because if you're not on your computer at this time, I get it. It's hard to buy the bottom. You might be on the lake with your family. You might be riding bikes, hanging out with your kids. You can't be glued to a computer screen. But if you're on the computer at the right time and you spot this, then that's a smart time to strike. But when's the next best time to strike? Well, that's when a retracement takes place. So we want to wait for a retracement after the rally off of the low and wait for the price to fall back to 50 to 61%. So how we do that is you simply go to the chart, and on the left-hand side of the screen, you're going to see these tools right here. You're going to want to find the tool that says Fib Retracement Tool. And you're just simply going to do the opposite of what I showed you in the last video. Instead of putting it at the high, you're going to put it at the low, and you're going to bring it up to the highest high that you can see right here on the price chart. And I'm going to drag it all the way over. Now, it depends on where the price action is at the time. As you can see, we're all the way over here. So maybe the price chart looks something like this. And let's say Bitcoin's at $104,571. And so we would just simply draw it up to this high right here and drag it over. And what we would do is we'd wait for Bitcoin to come back down to 50, which is 0.5 to 618, this retracement level, before we consider entering into a buying opportunity for Bitcoin. And if that doesn't happen, then we simply missed out on this trade based on this strategy. Now, there are some other entry points. I'm going to get into some nuanced points for you guys, which is different strategies, but you need to master this strategy first to be able to accumulate the best possible entry points at the bottom and the second best points on retracement. So we would just let this play out, and we want to see if we come within this zone right here. Now, you guys can draw your fibs and then also draw a little box within this range, and then just let the price do its thing over the next few hours, and then just walk away from your computer and come back, check it out. You don't need to sit on here for hours staring at the chart unless you got a weird fetish like that. Okay, I'm not going to judge you, but we're going to leave. We're going to come back and we're going to see what happens with the price chart. Okay, so as you guys can see, the price actually broke out from this most recent high. So we simply would just adjust the Fibonacci retracement tool and just put it right here. And if it comes within this range right here, which is also an area of interest because now you can see that it's support right here, this would be a great buying opportunity for Bitcoin. So now we're just going to let the price action play out and we're going to come back in a little bit. Okay, so now you can see that the price pulled back and it just bounced right off of the 50%. So this actually qualifies as a 50% retracement. It also is a higher low from the previous low. So how do we enter the trade? Well, what do? After a clear red candle closes on the 1 hour chart at the 50 to 61.8% retracement level, you want to log into your trading account and open the futures trading dashboard. So because we're on the 15-minute chart right here, we want to zoom out to the 1 hour and we want to wait for this bullish candle right here to close on the hourly before we enter the trade. So now that the candle is closed on the hourly, you can see that we absolutely actually exploded to the upside. So on a trade like this, you could still technically enter the trade, but if the price action is moving that quick to the upside, then you have to be careful because sometimes that comes back down really quick within this range and you can still get a good entry point by waiting another hour. Because as you guys can clearly see, getting in right here, when I gave the example at the start of the video, is a better entry point than right here. But let's just see how this trade would play out if we were to enter right now on this green candle body close at $105,504. So what I do is I log into my trading dashboard, I go to the futures section. You guys can do that through the link in the description below, and I select Bitcoin from the list. So once you click futures on the left-hand side of the screen, you can see where it says Bitcoin right here. Just select it. And if you can't find the coin, just type it in the search box. Make sure futures is selected, and I'm on it right now, so obviously it's not going to pop up. But you scroll over here to the right, and you want to choose market to enter at the current price, which is fast for crypto to get an instant entry point. Because if you do limit, then the price has to hit your limit price that you set. So we would do market. Now, this is an example, so the price has already gone past that point. But let's say we just put the limit price right here. We would want to select isolated under margin mode and click confirm. And we want to select max 2 to 3x leverage. Now, this will allow you to grow your account safely while learning. And you could do a demo account first if you want. They have demo trading in there if you don't want to risk your own money if you're brand new to trading. And I highly recommend that so you can get practice down first, trading live charts and entering and exit trades so you don't make any mistakes with your hard-earned cash. But once you are ready to trade with real money, it's super simple to load it up. It's super simple to trade with. You would grab this sliding bar and you would decide how much Bitcoin you want to leverage for the long. But make sure that you look at the top here where it says the number. See, this says 19x. That's actually very high risk on this trade. You want to select 2x to max 3x if you're starting out. So I'm going to do 2x for this example. And I would just do 1% of my account right here with this sliding bar. So you can see it's going to cost $464 in USDT. If I'm buying the bottom, I might risk a little bit more. But for this example, I'll do 1%, which is what I'm willing to lose. A general rule of thumb when people ask me, how much should I put into the trade? Well, it's what are you willing to lose? If it's your entire account, well, then you have to be okay with that. But I would never suggest that to anybody. So 1% to 2% of your funds, you're not going to bankrupt yourself. You can have 5 bad trades in a row and you're only down 5% on your portfolio. So proper risk management is the key to portfolio preservation. So you want to start small until you're unconsciously competent in this strategy. Now, if you don't know what unconscious competence is, when you click the link in the description below inside of Altcoin Pro University, my company, underneath Classroom right here, you're going to scroll down to where it says live event recordings, which is a bonus for annual members. And you're going to go to Mastering Wealth in Crypto, the talk that I gave in Vegas for our clients that flew all the way around the world and spent thousands of dollars to be there to learn from our team. Well, I talked about the 4 stages of competence, which is after extensive practice around 10,000 hours, you become a master and it's second nature. It's like tying your shoes. It's like remembering your own name, but it requires ongoing practice to maintain. So definitely check that out. I know you guys are going to love it. But the next step is to click buy long to start the trade. And as soon as we click buy long, the trade is going to be placed. We just have to click confirm. And you would set your stop loss at about 1 to 2% below the most recent low before the retracement to avoid getting stopped out too soon. So where that would be in this example is below this low right here at about $102,000. So I just measure 1 to 2% below that. And that's where I'd set my stop loss. Now I could move it a little bit tighter because as you guys can see, price is all the way up here. We're not down here. So there's not much risk of hitting that stop loss right now, but it's a good point to set it nonetheless. So what we do is a 2 to 1 risk to reward ratio. So if the risk here from this part of the trade to down here is about 2.77%, well then I'd want my reward to be double that, which is over 5%. Now it's important to look at the resistances, and you can see that about 4.62% is where we had a triple top right here. So I might even put my reward just right below that, and this might be a 1 to 1 risk to reward ratio trade. So it's not the best trade because as you can see, we did see a massive green candle on the hourly right here. If we were seeing a retracement down at these levels right here and we consolidated and we entered back here, it would have been a better trade, but it's still not the worst because we're playing it safe and we're not trying to catch a falling knife while the project is dropping, because even if I entered right here, the price could have dropped a little bit lower, but that's why we look for the most recent support to be able to set our stop losses. So let's say I set my take profit just right here at like 108,000 at this resistance, which also was support right here. So you got to be cognizant of where these key areas are of interest where price responded to, because that's likely where price is going to respond again. So that's where I would actually set my take profit, whereas a lot of people might set it all the way up here expecting price to just make a new all-time high. But what I would do for a trade like this is once it gets close, I would move my stop loss up so it's a risk-free trade. So that's a little bit more complicated of a strategy. We're just going to keep this simple so you can set it, you can forget it. We have our stop loss set down here at the bottom. We have our TP for take profit here at the top. And once the trade's placed, we just wait and we see how it plays out on the hourly chart. So we're going to come back here and we're going to see whether the stop loss gets hit first or the take profit gets hit first. And if we make 1% on our account or if we lose 1% on our account. So this is about a 1 to 1 risk to reward ratio. Usually if you win the trade, you'd be winning 2%. If you lose the trade, you'd be losing 1%. So you could technically lose 2 trades, win 1 trade, and still be at a break even. So that's why you want to have a solid risk to reward ratio of 1 to 2 or even 1 to 3 on even better trade setups, which I'll get into in future videos. So I'm going to come back and we're going to see if this trade hits the take profit. So as you guys can see, bang, it hits the take profit and closes right above it. So you would have profited on that trade. Even with you entering right here, you can see the price went above, it went below, it went above, it went below your entry point. So you would have been in drawdown right here, but because you set your stop loss all the way down here, it didn't even come close to it, and price goes all the way up to hit your take profit. So not only was this trade a profitable trade, but this trade right here would have been a profitable trade as well too. So this is super important. After you place the trade, let the trade play out. Try and avoid moving your stop loss unless price action clearly favors your trade direction. So an example would be a new higher low forming. So that would be like price action breaking out right here above your entry point, which is this yellow horizontal line, pulling back and continuing to the upside. I could technically take my stop loss from all the way down here and I could drag it up to a break even or even a little bit above break even to prevent some slippage and to also maybe make a few bucks there. But what I could also do that I've done a few times is I move it or below in this scenario, this recent low, because that is now the new higher low in an uptrend. And because Bitcoin is breaking out, forming higher highs and higher lows, theoretically, we would remain into this uptrend until this support is broken. So I would move my stop loss right underneath this support and I would just let the trade ride until it hits my take profit. And let's say it hasn't hit my take profit yet. For example, if the candle bodies are right here, my entry point is right here, my stop loss is now right here, and my take profit is up here. What I could do is I could move my take profit a little bit to the upside if you're comfortable with price coming back down and hitting your stop loss to affect your risk to reward ratio. So you want to avoid doing this, but this is a strategy you could deploy to make the trade completely risk-free. But you would only do this if you plan on monitoring the trade and spending more than an hour per day watching the chart. Because as you can see, now that take profit is now up here at these highs. So in order for it to hit, Bitcoin's price would need to tap this right here. So we're going to watch this trade closely and we're going to see what happens. On the next pullback like this right here, I would wait for a bounce. And as you can see, this is why you want to avoid moving your stop loss as much, because it came all the way back down here and it wicked right below your stop loss and stopped you out, which was a liquidity hunt, to then continue higher and bounce to the upside. So had you have just left your take profit up here, you would have made more money than moving your stop loss right here. But as you can see, the price quickly reversed to the downside. You wouldn't have lost money. So let's see what happens here as the price is moving down back to this level right here. So your stop loss down here wouldn't have been hit, but you would still be below your entry point right now. So you would have to wait for the price to come all the way back up again to hit your take profit all the way up here. So that's why it's important to set it and forget it. Check the risk to reward ratio after you place the trade and you set your take profit and your stop loss. Make sure it's roughly a 1-to-2 ratio or a bare minimum 1-to-1 to ensure that it's even worth the trade, and only close the trade early if the market shifts dramatically or if we see macro market news like what happened with Trump making posts on Twitter that caused this massive sell-off right here. Because on this retracement right here, I plan on moving my stop loss from below the recent low to the next low when Bitcoin decides to do something like this. So we'll see if this plays out. I could be completely wrong here. But because I only risk what I'm okay with losing down at my stop loss, I'm fine if the stop loss hits, because then I could run through every single one of these steps here to confirm everything that I just showed you in this video to see if it's an even better trade to long the market for the next reversal to the upside. So we caught one dip right here. We caught one dip right here. If Bitcoin reverses to the downside, we would just catch another dip. There's plenty of opportunities to buy the dip in this market. Just because you miss one dip or one bottom doesn't mean there's not going to be another. And we'll share with you inside of our private community when we believe those are going to happen, and also give you guys access to live calls every single week through the link in the description below. Simply get started, click calendar right here. You're going to see every Monday, Tuesday, Wednesday, Thursday, we have a call. Some days are off because our pros take a day or two off here and there, depending on their life schedule, but we're pretty freaking consistent. We're going to continue to expand to give you guys the most value possible to help you become an altcoin pro. So check it out. I know you're going to love it. It's only $97 a month or $970 a year. If you want to unlock those 3 exclusive bonuses, you can check them out through the link below. We have 100 plus expert curated classes. If you guys got value out of this video, I know you're going to love even more what's taught here inside of the classroom. And if you're not happy for whatever reason, we have a 14-day money-back guarantee. So you have nothing to risk, everything to gain, and everything to learn here. Because worst case scenario, you spend the next 14 days going through all of this education and you leave knowing more than you know right now, just like you've learned more throughout the course of this video than you know at the start of the video. I think you're going to be mind blown with what you learned inside of Altcoin Pro. And if you're happy, give us a review on trustpilot.com. And I look forward to seeing you on the next video. If you appreciate this one, make sure you like it, subscribe it, share it with a friend. And as always, stay bullish.